Investors, my portfolio, probably like yours, has been taking an absolute beating amidst all the market volatility, with the S&P slipping and sliding to lower lows. But I'm here to say it is time to buy. And a matter of fact, times like now are when the real investors come out to invest. So keep up to speed with my portfolio moves today as I run through all the purchases that I made earlier this week. That's 2 individual stocks and 2 very powerful ETFs totaling over $2,300 spent. With that, are you ready? So where do we even begin? With all the market chaos going on, since our latest inflationary reading came out to 3.5%, that's in the opposite direction of the Federal Reserve's 2% inflationary goal, to the hotter than expected consumer spending report, while the Middle East totally erupts into all-out war, a modern-day David and Goliath moment, but ultimately sparking what will likely be a very intense Israeli response. The market's now all over the place, news corporations are certainly enjoying the fearful headlines, and as for all of us, well, I certainly hope that you've been seizing the opportunity to buy for the long term. I'll bet my entire net worth on all of us being just fine. With that, you better believe that I've personally been buying. I'm going to now go ahead and share with you exactly what I've been buying, dollar cost averaging into my no matter what investment foundation, Vanguard's Total Stock Market Index Fund, ticker symbol VTI, which as per Vanguard seeks to track the performance of the US market and allows me plenty of exposure to large, mid, and small cap equities, all while granting exposure across sectors. As we can see here, 32.1% worth of the weighting here in tech, 14.2% in consumer discretionary, 13.1% in industrials, 11.9% in healthcare, and 11% in financials. Meaning we're talking about stocks like Microsoft and Apple, Nvidia, Amazon, Meta, Google, Berkshire Hathaway, Eli Lilly, and Broadcom that all make up the top 10 holdings of this fund. And with the chunk of the dividend income that I get from VTI, thanks to the 1.29% dividend yield for only $3 per $10,000 invested annually, I just went right ahead to pick up yet another share this past week for $250.45, adding to my investment foundation in my portfolio. But VTI is the no-brainer here. It's the Vanguard Technology Fund that has been more in focus for me lately, as it holds all the stocks that I personally feel are a little bit too risky for me to dive into, and it just tracks the entire performance of a benchmark index that measures the investment returns of stocks specific to the tech sector. I'm talking about direct exposure here to stocks like Microsoft and Apple, but then more so in Nvidia, Broadcom, Salesforce, AMD, Adobe, Oracle, and Cisco, with overall exposure all remaining within the tech sector, but through a variety of subsectors like semiconductors, system software, and tech hardware. Now, this is a rather new position in my portfolio, but one given our tech-oriented future that I'm really jazzed up about and just continue to dollar cost average into on a weekly basis. Already holding 19 shares thanks to my recent purchase this week that totaled $1,014.40, and another buy for $504.82 as the fund slid further into the red. And then I saw some opportunity in 2 individual dividend stocks as well. The first was Coca-Cola, ticker symbol KO, which is the one and only beverage behemoth that I really don't think I need to introduce. But I scored another share simply because I had just enough for it within my Roth IRA. So I spent $58.22, bringing my share count up to 26 shares. After the stock slid on the week, but knowing this is a long-term hold and just seeing 96% worth of appreciation over the last decade, with optimistic analysts out there projecting the share price to rise back up to $65 per share, it's about 13+% worth of upside, and hedge funds who have been loading up on Coca-Cola as well, I'm a fan. I couldn't help myself, and while sitting tight, I will enjoy the dividend coming in at a yield of 3.34%. It's been growing on average by about 7% year over year, while remaining on a dividend streak for, get this, over 104 years. And then I topped off my weekly spending spree with Visa, ticker symbol V, which is a major stock in focus for me this year and beyond, as I hope to scale this position to well over 100 shares given its business model as a transaction facilitator and not a money lender. Moreover, it's an industry leader and it just slid to $271 per share, creating a steal, especially when we zoom out and see over 456% worth of appreciation over the last decade. So I went ahead to score 2 more shares shares for a total here of $543.58, bringing my share count up to 19 shares of Visa. And I'm just going to be enjoying all the future growth as analysts expect the share price to climb up to $310.06 per share. It's about 14% worth of growth. But until then, I'm also going to enjoy the dividends that have been growing as well. Yield at 0.77% right now, but remains strong after 15 years worth of a growth streak. But check this out when it comes to Visa, 18% year-over-year growth. Now, investors, I spent a total of $2,371.47, and I'll tell you what, I have plenty more dry powder to keep on buying. But I want to know now what opportunities that you've been taking advantage of amidst all of this market volatility. Let me know down in the comments below. Catch more insights right here, and be sure to subscribe so you catch all of my latest.